Your ultimate guide to navigating tax laws in Pakistan for businesses, making taxes less taxing. Intro to tax laws in Pakistan.
Taxes are like the lifeblood of any economy.
And Pakistan, being a developing country, relies heavily on taxes to fund various sectors of the economy. So, we're here to give businesses a comprehensive guide to tax laws in Pakistan, making sure you're on top of your game when it comes to understanding and complying with the taxation system.
The ABCs of Pakistan's tax structure.
Pakistan's tax structure is like a three-layer cake. You've got federal taxes at the top, provincial taxes in the middle, and local taxes at the bottom. The Federal Board of Revenue, FBR, is the big boss when it comes to administering and collecting federal taxes, while provincial taxes are handled by provincial revenue authorities. Federal taxes, the big picture. And let's not forget about withholding tax. Employers need to withhold taxes from their employees' salaries to ensure tax compliance. Sales tax. If you're selling goods or services in Pakistan, you'll need to deal with sales tax. The standard rate is 17%, but there are some exemptions and zero rating for specific industries. And if you're a registered business, don't forget to get your sales tax registration number, STRN, and file your regular sales tax returns. Federal excise duty, FED. FED is like a special guest at the tax party. It's levied on specific goods and services, like beverages, cigarettes, automobiles, and telecommunication services. The rates vary depending on the nature of the product or service. Asterisk custom duties asterisk. If you're importing or exporting goods, you'll need to deal with custom duties. Provincial taxes, the middle layer. Each province in Pakistan has the power to levy specific taxes. This includes a provincial sales tax, which is similar to the federal sales tax, and a professional tax, which might apply to certain professions like doctors, lawyers, and accountants. Local taxes, the bottom layer. Local taxes in Pakistan mainly include property taxes and various charges on utilities, like water and sewage. Navigating taxation procedures and compliance. Tax registration. If you're running a business in Pakistan, you'll need to get a national tax number, NTN, and a sales tax registration number, STRN, from the FBR. You can do this online through the FBR's web portal. Tax returns and payments. Businesses need to file tax returns, including income tax and sales tax returns, by specific due dates. If you're late, you might face penalties and interest charges. Audits and investigations. The FBR is like the tax police. They conduct audits and investigations to make sure everyone's playing by the rules. It's super important for businesses to keep proper records and documentation to back up their tax returns. Tax incentives and exemptions, the silver lining. Investment tax credit. If you're investing in specified industries and regions, you might be eligible for investment tax credits. Export promotion schemes. If you're an export-oriented business, you can benefit from tax exemptions or reduced rates on imported raw materials and machinery used for export production. Special economic zones, SEZs. SEZs offer tax holidays, reduced tax rates, and other incentives to businesses operating within these zones. Research and development, R&D, tax credit. If your business is engaged in R&D activities, you might be eligible for tax credits or deductions on qualifying expenses. Keeping it clean, compliance and record keeping. Financial records. Keep detailed financial statements, like income statements, balance sheets, and cash flow statements. Purchase and sales records. Keep track of all your purchases, sales, and expenses. Employee records. Keep records of employee salaries, withholding taxes, and other employment-related taxes. Asset and depreciation records. Keep documentation related to asset acquisition, depreciation, and disposal. Tax returns and payment records. Keep copies of your filed tax returns, tax payment receipts, and any correspondence with tax authorities. Wrapping it up. Understanding and complying with tax laws is super important for businesses operating in Pakistan. We hope this guide has given you a solid overview of the tax structure, registration procedures, compliance requirements, and incentives available in Pakistan. Remember, it's always a good idea to seek professional advice and stay updated with any changes to tax laws to ensure you're compliant and optimizing your tax positions. By keeping accurate records and sticking to the tax laws, you can contribute to the growth of the economy while avoiding penalties and legal issues. And there you have it. A comprehensive, informal, and hopefully interesting guide to tax laws in Pakistan for businesses. Remember, when it comes to taxes, it's always better to be safe than sorry. Stay informed, stay compliant, and you'll be just fine.
Happy taxing!